diminishing balance method. Okay.
Okay, ma'am.
Student, have you understood fixed installment method?
Yes, ma'am.
Okay, so today we'll see this one. Diminishing balance method is also called as, what is the other name for
Straight line method.
this? Is also called as return value
Written down value.
method. Okay. Now today we'll see two sums. One is ordinary sum, how to do it, and next one is if suppose sale is done, how to do. Okay.
Yes, ma'am.
Madhav and Company purchased a machine on 1st April 2017 for rupees 20,000. Okay. And depreciation charge is 10%. And prepare machinery account for 3 years. Okay, now this is the sum. This is a simple sum. We'll see it now.
Ma'am.
Take it.
Ma'am. Ma'am.
Take it.
I'll back. I'll come in 2 minutes, ma'am. Emergency.
Okay, when you come back, you tell me once.
Okay.
Hmm.
Now we can continue now.
Okay. So last class we have seen fixed installment, no? Now this is return down value method. We'll see how to do the sum. Okay, this is a simple sum only to understand. So date, particulars.
Good amount.
Mm. So when did we purchase a machinery? Mother and Company purchased a machinery on 1st April
2017.
2017. So by cash, If it is checks, you can write even by bank also. By bank amount how much? 20,000.
20,000.
Okay. And we'll use it for 1 year. 1 year means what? 31st March 2017 by depreciation. Okay, 18.
18.
By depreciation on 20,000, 10%. On 20,000, 10% means how much? 2,000.
2,000.
Okay, so 2,000 is the depreciation. Now we balance it. 20,000. Same 20,000 I'm bringing here. From 20,000, if you deduct 2,000, it is 18,000. So on 31st March 2018, by balance carried down is 18,000. Okay. Next on 1/4/2018,
18.
to balance brought down is 18,000. Okay. Now usually in fixed installment method, what we do is we will write 2,000 every year same. Okay. But now here what we do is every year we'll calculate newly. So on 31st March 2019, by
By
depreciation
depreciation.
on this amount. In fixed installment method, what did we do? Every time the same thing we wrote. Okay, 2,000, 2,000, 2,000. But here on balance brought down, you have to calculate. That is 18,000 into 10% means 1,800.
1800.
Okay. Now you balance the account 18,000. Here also 18,000. 18,000 minus 1,800, how much?
18,000.
Minus 1,800.
Ma'am, after 10, what is that, ma'am?
10%.
10%.
On 18,000, 10% is 1,800. From 18,000, if you deduct 1,800, how much you'll get?
1,800.
16,200 balance. Got?
Yes, ma'am.
Now 1/4/2019. To balance brought down amount is 16,200.
200.
Now again we'll use it for another year, 31/3/2020. Now by depreciation is, what is the amount? 16,200.
200.
At 10%. So 1,620. Okay. So may again tally them. 16,200. 16,200. 16,200 minus 1,620 is
16,000 minus how
how much
much?
now? 14,580. So this is first year. This is second year. This is
Third
third
year.
year. Now can you see the screen?
Yes, ma'am.
Now in fixed installment method, what you used to do whenever you are calculating depreciation, 2,000, Same amount you used to write 2000, 2000, 2000. But this is a written down value method. It is also called as diminishing balance method. So what we do in diminishing balance method is every year we'll calculate depreciation. Okay. So every year means what? Here first machinery cost is 20,000. We used it for 1 year. On that 10%, if you are calculating, it is 2,000. Okay. Now next one is from 20,000, if you deduct 2018. Now 18,000 will calculate depreciation, 1800. Again, if you deduct 16,200, on that freshly again will calculate 10%, 1620. So what does return down value method say is every year we are going to calculate newly depreciation and then deduct the amount. Okay.
Yes, ma'am.
Now this is take the screenshot.
Taken, ma'am.
Okay. Now we'll do one sale sum. Are you following, Zishan?
Yes, ma'am.
Okay. Now you see this is a full-fledged sum. You understand it nicely. Okay. Okay. Now take this sum, Zishan.
Yes, ma'am.
Now we'll make summary of this. Okay. Ravi bought a machinery on. Ready?
Yes, ma'am.
Now before you start the sum, you should make a summary. Okay. Now what is the summary? Ravi bought a machinery on 1/7/2010. Ravi bought a machinery for 40,000. Okay, this is the first machine. And what are the installation charges? 6,000.
6,000.
Okay, so what is the total cost of the machinery now? 46,000.
46,000.
Okay, sorry. And depreciation is
10%.
sorry, depreciation is 10% on written down value method. Okay. Next
Yes,
one
ma'am.
on 1/1/2011. So this is a second machinery. On 1/1/2011, purchased a second machinery for rupees 24,000.
4,000.
Okay. And on 1/7/2012, so this machinery on 1/7/2012, they sold it for how much? 16,000.
16,000.
So till 2 years they kept the machine, and on 2012 they sold it for 16,000.
16,000.
Okay. And on same day, when they sold it, on the same day, they purchased another machine, that is third machine, for 30,000. Okay.
Yes, ma'am.
This is the summary. Now we have to prepare a machinery account by using 10% depreciation value. Okay. So we'll see how to do the sum. Okay. We'll start.
Yes, ma'am.
1/7/2010. Okay, they purchased a machinery. So to cash amount is 46,000.
40,000.
Okay. And again they purchased in 2011. So till that time we don't need. Now 46,000. Now this machinery we'll use it till 31st March 2011.
11.
Okay. So by depreciation, first machinery. So how much it will be? 10%. So on 46,000, 10% is how much? 4,600. Okay, ma. On this
Yes, ma'am.
10%, if you calculate
600.
4,600. So we purchased in 1st July. Okay. And till what time we have used till 31st March. Now from 1st July to 31st March, how many months you calculate? July, August, September, October, November, December, January, February, March. 10% is for 1 year, no ma.
Yes, ma'am.
So we used it only for 9 months. So 4,600 by 9/12. So how much you'll get? Now you prepare rough work here. First machine cost is 46,000. Okay. First year we used only for 9 months.
3,000,
Okay, 9 months
4,000.
means what? July, August, September, October, November, December, January, February, and March. So we used only for 9 months. So usually how you'll calculate depreciation? Depreciation is equal to 46,000 into 10%. That is equal to 4,600. This is for
600.
1 year, but we used only for 9 months. Okay, so 9 months means how much you'll get?
3,450.
You calculated?
Yes, ma'am.
How much is the amount?
3,450.
3,050. Very good. Okay, right. Now this is on 31/3/2011. Okay, so on 1/1/2011, that is in the same year only, in January, they purchased another machinery for 24,000. So on 1/1/2011 to cash, how much they purchased? 24,000. This is first machine. This is second machine. So when we'll close the book on 31st March 2011. Okay. Now by depreciation, second machine. How much is the depreciation? 24,000 into 10% into how many months we used the second machine? January, February, March. Only 3 months.
March. 3 months.
Okay. Now you write here second machine. Second machine, when did they purchase? On 1st January 2011. When we close it on 31st March 2011. So we used it for 3 months. Okay. Now cost of the machine is 24,000. Depreciation is equal to 24,000 into 10%. Means 2,400. This is for 1 year. But we used only for 3 months. How much you'll get?
3, 4, 7.
How much you'll get, ma?
Oh, 1 second, ma'am.
2,400 into 3 divided by 12.
4,000.
2,400 into 3 divided by 12. You don't have calculator?
600, ma'am.
Very good. 600.
In laptop it is difficult, ma'am. Little bit.
Acha, okay. So now total is 6 plus 4, 10, 0, 1, 4, 5, 6, 70,000. Now same 70,000 I am bringing here. 70,000 minus 3,450, 600.
600.
So you'll get 65,950 by balance carried down. Okay. Now next on 1/4/2012 to balance brought down is 65,950. Okay. Till here have you understood, no?
Yes, ma'am.
Okay. Now, this is the first machine. Now, first machine depreciation is 44,600, but we used only for 9 months. So, 9 months depreciation is 3,450. Okay. Now, second year to cash is 24,000. Second machinery. This we brought it on January. So, total depreciation is 24,000, 10% means 2,400. But we used it only for 3 months. Okay, so 3 months is 600. So balance is 65,950. Till here, have you
950.
understood?
Yes, ma'am.
Okay. Now, this 1/4/2012 opening balance is 65,950. Now, on 1/7/2012, you sold it for 16,000, it seems. Which one? First machine. Okay, so on 1/7/2012, that is only, no, Emma? Huh. 1/7/2012. So in 12. On 1/7/2012, we sold it, it seems. So sold means by cash 16,000. This is
1,000.
what it is in first machine. Okay. Now from 1/4/2012 to 1/7 means this is April. April, May, June, July. For 4 months you used machinery, no?
Yes, ma'am.
So for 4 months you have to calculate depreciation, no?
Yes, ma'am.
Okay, so we calculate here now. Now you see this is a first machine, 46,000, 10% means 4,600. You 9 by 12 means 3,450. So 46,000 is the actual cost. From that first year, how much did we provide? 3,450
400.
depreciation. 46,000 minus 3,450. So 42,550 is the balance.
Balance.
Okay. Second year. Now on 42,550, again 10%. Okay. Is equal to 4,255. But we used it only for how many months? 4 months.
4 months.
4 months we sold it. So into 4 divided by 12. So 1,418 is the depreciation. Okay, this is for second year. So 1,418 by depreciation of first machine. Now understood, Zishan?
Yes, ma'am.
So 46,000, first year 3,450 we deducted, 42,550 is the balance. Second year 10% is 4,255. Now, but we used only from 4 months, that is from here to here, we used only for 4 months depreciation is 1,418. Okay, we purchased 46,000, used 3,450 here, 1,418 here, and we sold it for 16,000. We'll see whether we got a profit or loss. Okay, now 46,000 minus first year we used for 3,450. Second year we used 1,418 worth. Now what is the balance? 41,132
32.
is the machinery value. But for how
Value.
much did you sell it for? We sold
3.
it for 16,000.
16,000.
So you sold it for profit or you sold it for loss?
Mm.
Hmm?
Loss.
Loss. Very good. So machinery 46,000 minus 2 years depreciation 3,450 plus 1,418. If we deduct, value is 41,132. So 41,132 worth machinery, you sold it for 16,000.
16,000.
So loss is 25,132.
2.
This is your loss. Okay. If you
Yes,
get
ma'am.
profit, you'll write this side. If you get loss, you'll write this side. So by profit and loss, how much loss is
1,000.
25,132.
132.
Now this is all is about your first machinery. Okay. Now you have a second machinery also. What is the second machinery? 24,000. And what is the depreciation you provided for first year? 600. Okay. Now you have to calculate depreciation for second machinery also. By depreciation, second machinery.
Second machinery.
For second machinery. Okay. So second machinery. What is the total cost? 24,000. Last year
24,000.
depreciation, how much did you provide? 600.
100.
So what will be the balance now?
25,132.
23,400 is the balance.
Balance.
1 second. Hello? అదా ఒక్క నిమిషం నేను స్క్రీన్ షాట్ పెట్టాలా మెయిల్ కొంచెం గట్టిగా మాట్లాడు లేదు కలమని చెప్పింది డైరెక్ట్ స్క్రీన్ షాట్ పెడతాం So 23,400.
400.
Now on that 10% is how much? This is for second year. 23,400. On that 10% is 2,340 is the depreciation for second year. Okay. Now that we'll write it here. By second year 2340. Okay.
Yes, ma'am.
Now
2, 3,
on
4,
1/7/2012 you purchased another machine for 30,000. So again on 1/7/2012 by cash, this is your third machine, you purchased it for 30,000. Okay. Now
30,000.
by depreciation, this is a third machine. How much you'll calculate on 30,000? 10%. But for how many months you used? You purchased it in July. July, August, September, October, November, December, January, February, March. 9 months. Okay. Now you used this third machinery for 9 months. Third machinery cost is 30,000. On that 10% depreciation, that is 3,000. But you used it only for 9 months. So 3,000 into 9/12. How much you get now?
52,000. 22,500.
3,000 into 9/12.
3,000. 22, 2,000 to 250.
2,250.
250.
Okay. Amaya. Now we'll close this. This one is how much? 65,950 plus 30,000.
Mhm. Mm, 65,000. Ma'am, 24,000 or 46,000 up one.
First one is 65,950 plus 30,000. So 95,950 this side. This side you check the total. 16,1418
9,500.
and
95,000.
25,132 2340 2250. You make this total.
92, 16. Ma'am,
Mm.
1,15,000.
What is the total?
1,15,122.
Ah, 1625, ma. You do it again.
only 1625, ma'am. 41,132.
How much you got?
14,132. 55,818.
55,818
818.
is the balance. Okay.